Welcome to the Daily High on this Thursday evening and Thursday morning in the better part of the world. Tone, good morning, mate. Markets are very, very stable.
Morning. Very interesting morning. A little bit of a roller coaster since our last show, but we haven't deviated much from that $40,000 zone. So
Yeah.
let's go and start looking at the charts. You want to go first this time?
Yeah, before I pull the chart up, I showed Tone 5 minutes ago before we went live, and I was $1.33 down in the trade. So it's going to be very interesting when I click this screen share, what the result of that is. Did I win? Yes! Ah, I can't tell you how excited I am that I won this trade because all day long I've been in a loser. And just so you know, I I absolutely got my trade liquidated. Not liquidated. The stop loss got hit at 1.5% last night. And then yesterday's show, I said, "Oh, it's going to be good because I'll win either way." And 5 minutes ago, I lost both ways. I lost the trade and I was going to lose the competition. So the fact that I won this competition is very, very exciting for me. I needed something to carry me over the edge. All right. I made $5.68. We'll call it $5 in the trade. And Tone, what did you make? I'll just readjust my P&L here. Five. This is my initial capital, not P&L. There it is. Done for tonight's trade. Tone, up to you, mate. I'm going to go over to the board while you do yours.
All right. So looks like I lost $9, or I mean, we can round it up. I can make it 10 since you rounded yours down a smidge. There it is. So on a shorter term chart, had we done this show 30 minutes ago, I would have won the trade. Like when I woke up and started preparing for the show, we were sitting right up there, right here at 40,200. And it literally, the moment the show started, is a 10-minute candle. So literally, actually, we should be able to call it a draw, no?
No,
Look,
no, 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 no,
the
no.
show
Yeah.
started at
No, no, no.
7:30, and the opening price of the 7:30 candle, 7:30 in the morning New York time, the opening price on that candle is 399.99.74. So I guess you won by 25 cents had the show started exactly on time.
I don't want to hear any of this bullshit. I won the trade. I moved up the board and you had a losing trade and you went down. I don't care if it's $1 to 69 cents. We're counting it. We're back to square. We're even on the board. Love it. Love
All
it.
right.
Adjust
So
your adjust your
I'm
P&L.
gonna adjust it to -10. So I'm gonna go to float. I'm gonna make this down to over to 15.
Beautiful.
Okay. And yeah, so just to analyze real quick, I totally forgot to say it yesterday. On yesterday's losing trade that I had, I went short even though the MRI buy was coming up. And my thought process was it would bounce off the moving average and then go down. Now, we hold our trades until the next show. But in reality, if I was in this trade, when would I have realized that the trade was a mistake based on the hourly chart? And that realization comes over here at the break of the prior swing high and the break of the moving average, like the full break of the moving average with this green star candle. Now, something similar happened on this trade. Now, on this trade, I went long off of this MRI sell. And while it did initially start out in the proper direction, this trade also went ahead and broke the prior swing low. But the main difference is that this trade, while breaking the prior swing low, still had one more area of support being the moving average. And while there was a 1 hour candle that closed below the moving average, it didn't give you a full candle on the other side of the moving average, which to me is the real confirmation of breaking a moving average. In addition, there was a daily MRI buy coming in. So that gives the trade a little bit more, I guess, confidence, even if it's not perfectly going in your direction. The fact that a very significant higher level time frame is on an MRI low or an MRI buy, even though I really wanted this MRI buy to show up closer to 38 than to 40, it's still an MRI buy, so it's relevant. So I do think that there is a possibility between these candles and the nice bullish volumes here to rally us at least back to the area of the breakdown, which was 41.5, or even a little bit higher to the declining moving average. So now that, since I'm already on the daily chart, that's exactly how I see it. I see this for now as a dead cat bounce with a high probability of reaching as far as, I guess, 41,500. That's the area of the prior supports that broke with a vengeance, and slightly higher to the somewhere to these two moving averages. And then we'll reevaluate the position to see if this is going to be the low of the year, basically. And we're finally ready to go higher, and all future pullbacks will be higher than this sell-off of the ETF. However, the relentless, brutal selling in GBTC is only getting worse. The last number we got was 523,000. GBTC has now sold pretty much 100,000 Bitcoin in the last 10 days or 2 weeks since the inception of the ETF. We can double check it. A lot of people got confused when I said I think GBTC will die. When I say things like that, they're not imminent. GBTC is not going to die next week, but give it 3 years, and there may not be a GBTC ticker on the market anymore, because they're going to bleed away all of this Bitcoin. There was another question to the video saying, well, if GBTC has purchased all their Bitcoins at much lower prices and now they're selling them, aren't they making money? Or if GBTC bought a lot of Bitcoin back in 2021 at like $60,000, doesn't this mean that they're losing money if they're selling now? The answer is no, absolutely not. GBTC only makes money. They do not buy Bitcoin for themselves. This is not their Bitcoin. This is people's Bitcoin that they're holding for them. So it's kind of like saying, hey, the bank provided a mortgage for a house at $1 million, and now the house is being sold for $500,000. Didn't the bank lose money? No, the bank didn't lose money. Whoever took that mortgage out and is paying the bank lost money, unless that person, of course, defaults and then the bank took the house. But GBTC, they're just middleman. They're buying and selling Bitcoin on the behalf of the people. They don't care. They don't give a shit if it goes up or down. And then they're charging you 1.5% to do it. Used to be 2%. So no, I mean, it sucks for GBTC to have less Bitcoin in management, because now they're making less money every single day, because this fee is now based on a smaller amount. But as far as the price of Bitcoin hurting them, that doesn't matter. Of course, they would prefer Bitcoin price to rise, just like every single Wall Street institution would love for every single asset price to rise, which includes gold and silver, that a lot of gold bugs think that the financial institutions are suppressing. The more the asset goes up, the bigger the FOMO, the more Wall Street sells that asset to unqualified investors who always buy at the top, and the more money that they make. So they love it when speculative assets go up. They hate it when speculative assets crash. They make less money when they crash. They make a lot more money when they go up. Okay, got off on a tangent there for a second. So that's pretty much it on a daily chart. I like this MRI buy, but the relentless selling from everyone exiting GBTC and either waiting for the low in Bitcoin to buy back, or buying it back through other proxies is continuing to be a huge headwind for Bitcoin. The allocation remains at 50%. Hopefully, well, we got 3 more days in this candle. It just begun. Hopefully, we don't have to make any more hard decisions, and Bitcoin will not go below the long-term moving average on a 4-day chart, which is the 30-day period. The weekly chart remains in a 1 to 3 candle correction. This correction has incredible support between 36 and 38,000. If we get to that area, we will be entering a brand new MRI trend, which means another 10 plus days of downside. If we now to reverse and start to go down for a second consecutive MRI low, which would be nice, but it will be, concerning and nerve-wracking if you have bullish positions, and then we will go down into that $37,000 area. All right, I'm gonna leave it here. Matt, floor is yours. Let's see your charts and what alphanumerics says.
Sure, mate. And that's great, Tone. Everything you just said then was fantastic, and I do agree with everything. But I just want to reiterate the fact why I love so much alphanumerics. I know it's what I built, and I'm not just trying to sell more indicators. I would love to do that too. But it's just the simple fact that we cleared out of those trades all of this and I don't want to hit on this too hard because it might make the shows that I'm doing in the next few months saying the same thing over and over and over again. But for me, this is, I know I took on a trade yesterday. It was just a punt more than anything else with found money that I had from my win from my trade. So that's okay. I took the 1.5 loss. That's okay. I don't mind that. The majority of that big trade, those 3 big trades that I made, they were closed. They were closed at 41, we'll call it 800 back here. And I've raised cash. You don't always have to be long if you're in your trade account. I love this. I'm not concerned if we crash down. I'm not concerned if we rise. If we rise, I get back into buying into strength. This for me is no buy zone. It's just not a no buy zone, man. Like, I mean, this is, as I said last night, and we'll probably be saying for the next few months in consolidation, this is indicative of a downwards trend. Like, we are below on the daily time frame all of my moving averages, save for the 200, which is down here. But the nearer moving averages that I use, which is the 7, the 30, and the 50. 7 is blue, the 30 is red, and the 50 is yellow. That the 30 is now crossing the 50. So they are in order in a downwards trend. And in a downwards trend, we will continue these little spikes. And as Tyler Jenks would say, I see these little moves. I see them, but I'm not interested in them. I need something more substantial. We're coming in on the 9, and that is substantial. That could have a relief rally. Hell, it could have a relief rally to 43. It still wouldn't do it for me. It's not enough. It's not enough. I need something clearer, something back in the range and above the range moving up where I can go long. I trade with a lot of money and a lot of leverage. I can't be jizzing around. Sorry for that word. That mucking around with these little tiny little $1,200 moves, man. I need something big. And that might be, as we say, we come back down, get the daily green diamond. That's like my entry level. That's basic stuff. I need something bigger than that. I need something more. I need something more. On the 4-hour time frame as we go higher. This is what I said last night, and I'm sorry, I'll be repeating it ad nauseum. This is indicative of a downward trend. This coming back up, but we didn't clear the 30. And then we're breaking down again. What we push lower, we break below the 38,800, it'll crack lower, but then it'll meander and come back up and test the 30. This is just rinse and repeat until we see a full-blown break of these moving averages in my books. And if you look back in time, these waves, save for like this horrible period here where we just went sideways for a very long time, typically once the wave changes, we're on a weekly scale right now. They stay crossed for a while. We catch the big moves here with alphanumerics, and this little sideways stuff we struggle with, but we get these longer term moves. It's unlikely for me that we would just come down for a week, 2 weeks, and then recapture the green wave and then onwards and upwards. It tends to be more brace yourself for the fact, not the fact, brace yourself for the possibility that we meander here for quite some time while GBTC continues to sell off, while there's uncertainty in before pre-halving and all this sort of stuff, and it might take till post-halving till we recapture these highs. You don't have to think that this tiny little 20% dip from here to here, that's it, that's the bottom, we're going to go on forever. Maybe that is it. Maybe that 20% was enough, but maybe we're stuck in a 3, 4, 5, 6 months consolidation. Tom, what are your thoughts on that? Is that crazy?
No, I completely agree with you. And again, this arrow for me, I know I don't have a label here, but this entire range between 41,500 and 38,000 was like a no buy zone. It was a complete, hold the cash position. There was one exception. That one exception was an MRI low, an MRI buy opportunity, but it's not a clean MRI buy opportunity. It's still an MRI buy, but it's not clean. Had it come on this candle, taking place a little bit lower than it even did, had this candle on January 23rd closed at near the lows, and then this candle that you're looking at was happening today, I would be all over this buying opportunity right now.
Tone, how would you feel if today's candle closes at 39,000 and you get a clean an MRI bottom there?
No, I wouldn't feel very good, because if it closes at 39,000, it would be a bearish candle.
Call it 38. If it actually gets to the bottom and it becomes the bottoming candle.
Again, I would not feel comfortable if the candle looks like this, right? Any candle that closes near the lows sets up the following candle to be a disaster. Now, you can see that the following candle was a disaster and then rebounded. This is the candle I want to see. So had today's candle opened below 39, traded down to below 38, and then closed the day closer to 39 than 38, that would be a screaming buy for me, okay? So again, I reiterate back to the perfect buying opportunity, perhaps in Bitcoin ever, because of the structure. This is the structure, okay? This was the MRI warning candle with the orange arrow. And you see how it would crash down. It was the worst candle of the trade, and it closed near the lows. If this candle happens on an MRI by itself, I'm not comfortable. But the following candle that happened to be the MRI buy candle went all the way down, touched an area of support, and rebounded and closed near the highs. And this is where you see the volume is a red spike, but on tone vase volume, the volume is a green spike.
It's funny, that same period of time will forever be. I screen grab that in every presentation I do on alphanumerics all over the world for the rest of my life. I'll use this exact daily candle, and it's funny with the MRI, you probably will as well.
Absolutely. Absolutely. So this is the kind of candle I want to see on an MRI buy, or the candle after the MRI buy, or the candle before the MRI buy. But if this was the MRI buy candle, I would be very nervous going into the following day. Now, this kind of MRI buy is even a little bit better for me, even though this bullish trade didn't work out. This candle has strength, and it closed at a new swing high. Even though there is consolidation at the low, anytime there is consolidation at the low with an MRI, to me, that's bearish. or neutral. It's the MRI saying go up, the consolidation and candlesticks tells me we're going down. Same thing here. The MRI buy is saying we go up, the consolidation and candlesticks saying we're going down. So it's almost a 50-50 trade. The good news is this trade will move. You see how it moved a lot here to the upside, and here it moved a lot to the downside. But when you take the swing at this, right, you take the trade to the upside, not to the downside. And your stop loss is lower than the consolidated lows. And it never got hit. Over here, it got hit fairly quickly. So you don't lose much money when you're wrong, but you can make good money when you're right.
Tony, I was just going to say, just leave it right there for a second. A lot of people who are novices might be looking at the MRI and saying, well, which one do I buy? The same with alphanumerics. It's not just a buy signal that you can just buy blindly and go all in on. If you watch Tone Vases, go to his website and go to entries, exits, and stop losses, his tutorial video that I took, well, fucking 7 years ago or whatever it was, you'll understand that every trade, once it's entered, is 50-50. It's all about risk management and how the position is managed. So you might look at Tone's second, warning candle there and say, well, that one didn't work, that the thing's a failure. Tone wouldn't have lost money on that. Well, maybe, 1%, like I did last night. It's a manageable loss, and then he would move his stop losses up candle by candle to take profit. He would never let his winning trades turn into losing trades. It's not just an indicator that's going to get you good profits. It's the entries and exits, the stop losses, and position management. Everyone who's been trading for a long time understands that. I can trade with no indicators. It's all about the risk management and the management of the trade. Tone, you'd have to agree with that, no?
Yeah, 100%. 100%.
I mean, people sometimes comment on my alpha, oh, geez, that green diamond didn't work. And I was like, yeah, they don't work. It's about how you manage the position once it's entered, I think if you go,
I want to. Oh yeah, go ahead.
I'd love you to look at just the weekly time frame for a second, because we need to reiterate the fact that this is on the MRI is perfect on this. Alphanumerics and the MRI are spot on here. Alphanumerics says the wave is green has changed from green to red. This is cautious. Your macro mindset should not be looking to buy every dip right now. You should be in cash, waiting to see what happens. You can always buy higher. You got out at a good price. You can buy way lower with great buying power. And the MRI is giving you a red star candle to the downside. This is concerning. So before you think that, like, oh, we're just going to drop 20% and that's it, we're done, we're going to go up forever, the MRI is saying, baby, this thing's getting started. We need to see what happens next week. This week, it looks bad, but we could recover this week. Next week changes. It's a 1 to 4 candle correction. We're onwards and upwards. But from where we are right now, we're in the mid-range of a red star candle. It's not the time to be rushing in. That's what I think.
Yeah, completely agree. Just wanted to point to one more chart. CryptoQuant posts charts every day, at least one chart on in their public channels about on-chain analysis. This was the chart that was posted. Also a little bit concerning based on how many large holders have moved Bitcoins into the exchanges. And in the past, whenever you see these huge yellow and pink spikes, not always, but more often than not, they tend to lead to more sell pressure. There are instances where they don't. You can see it right here on the breakout. Also, you don't know what the intention is of the people moving this Bitcoin into the derivative exchanges. They could be looking to leverage long that Bitcoin, but usually they are looking to unload and convert it into Tether. That's usually, not always, but usually. So I would treat this as a caution. If this was happening within a slight uptrend or in consolidation, I would see it more as a bullish indication. But to me, this reads a little bit more bearish than bullish, which is concerning, especially since I am itching to go long here off the MRI buy. By the way, there is a link for Crypto Quant. We're going to try to have them on the show to talk more macro and on-chain analysis for Bitcoin. So if you are interested in on-chain data, they also have a page where they track how much Bitcoin is being bought and sold by all the ETFs. And also, shout out to this page right here that did a really awesome job. This is heyapollo.com. And they're also keeping track. These numbers are pretty much in line with my numbers in my spreadsheet. But then they also have this really cool graphic of how much Bitcoin these institutions have been purchasing since the start of the ETF. So it's really cool. That's at the start. So Van Eck had the most to begin with, and then you see it going down. You see BlackRock going up, and Bitwise is right there. So they did some really cool stuff with this website. So you can also check it out if you want to keep track. I'm not going to be, copying and pasting numbers into the spreadsheet every day. Eventually, websites like this are going to pop up. They're going to do a way better job with automated numbers and checking the blockchain and the addresses and stuff like that. So go ahead and keep that in mind. It was super, super cool.
Yeah, they've done a great job there. That's terrific, isn't it?
Oh, one more person asked about the BitMEX funding rate, and we're probably going to leave it there. That is on my daily chart. I haven't looked at the BitMEX funding rate in a long time. I know BitMEX. Oh, where the hell did it go? Huh. Oh, that's strange. I actually don't remember the. Damn. I can swear it was in my daily chart. I may not want to do this on live air to try and. Oh, here it is. I think it was this one.
Yeah.
Surprised it was gone. So the BitMEX funding rate, even though not a lot of people are trading on BitMEX anymore, you can see how it's been favoring the bulls since the beginning of January. So it's back into this negative area. It hasn't had a huge positive area in a while. Like this was during the raging bull market. And this was that China crash. And then this was the tail end of the bull market. And you can see how we went huge into positive territory back in November with the run up, and now we're back in negative territory. So something to keep an eye on as well. All right. Anything else we missed? Matt, Matt, feel free to close us out. We got to do our trades.
Yeah, mate. We've got a question here from Mel, if you'd like to take it on the group chat here. Other than that, I'm happy to wind this show up.
URA and UEC. I'm not sure what those are. I can go ahead and glance. NVIDIA has just been a rocket ship, and the stock market is at new highs. Once again, no surprise here on this end that the stock market is at an all-new high. Not surprised at all. URA, what is that? Oh, uranium. Yeah, a lot of people seem to care about uranium. I don't know why. Uranium is at new significant highs. And I would be bullish on uranium. And UEC is also uranium. And it's at a new high. I'm always bullish at a new all-time high. Unless it's the new all-time high on an MRI top, and then I get cautious. So if it's not, and if it's a new all-time high on a green star, I would go leverage long at a new all-time high. Here's a perfect example of an MRI top on a bearish candle with a 1 to 4 candle correction, followed by a massive move to the upside. So this is, and it wasn't just an MRI top, it was an extension C top as well. This to me is super bullish. Right here, maybe a pullback back to the moving average, and then higher. It looks like I've looked at this before in the past, and look at this green arrow that I must have drawn. I don't remember ever looking at this because I would have looked at it back in May of 23. And I didn't just, this wasn't a planned question. I tend to draw arrows as I look at things, and then I leave them, and then I forget that I looked at them. What an amazing move off of $2, and it's now 7 in less than a year. And your green wave turned bullish at $3, and we're now at 7.
And your topping candle there in the MRI got me out of the trade exactly the same spot, and the same candle got me back in. It's actually quite hilarious.
Right. So yeah, great find. And here's another example. You're breaking out from a prior swing high. You're breaking a moving average. The green star comes the next day. You're breaking the MRI resistance line. Yes, that is the all-time high, but the more relevant high is this consolidation at best fit line. You can even be, a little more loose with that because you've broken all the moving averages. They're all rising. You're breaking the MRI resistance line. You don't need to wait until you break, the final weekly high close. You don't need to wait that long. In fact, if you
especially coming off a lower base where it came off, it didn't come off through consolidation. It came through.
Exactly.
Yeah.
Exactly. You're coming off a lower base, and you don't want to wait too long and then finally buy the day before an MRI top, right? So you really want to get into these things in the beginning of the MRI trend, which tends to correspond with the green star candle. So yeah, this is a great example. Even though this is
good catch, Mel.
This could be a frustrating stock to trade because of this massive year-long consolidation, but it's done well. It's done well, though I will say this would not have been easy. This red star candle is very, very troublesome, and it might have even gotten me frustrated with this consolidation, making a new low close, and I would have said, screw it, let me lose, 3 cents on the stock per share. Because it's not moving anywhere, and that happens sometimes. And if I'm paying attention, I'd get back in. But trading, no one ever said trading is easy. But and I'm not even going to say with the right indicators, with the right discipline, trading is manageable and profitable.
Well put, mate. Well put. Let's get this trade going. This is big one.
All right.
This is big. We're back to square.
All right, I'm gonna do it live on camera while you put yours in. So you're like what, $5 in the profit these days?
Yeah, mate. Count them. 1, 2, 3, 4, 5. What's that? What's our starting price? $8.50.
Wait, I need to open the right chart.
All right, our
starting price is $39,850.
All right.
Okay, now you got your trade in?
I'm in.
You good?
I'm good.
I am gonna trust the MRI, so I am gonna go long. I don't like the candle structure, but I'm gonna trust it enough to stay with the exact same trade as yesterday. I am gonna keep my 3x leverage. And I'm gonna go long at 39,850 for a buy.
Give me the screen share. That's very concerning, Tone, because your boy Matt's taking the opposite side. 1,005, 39,850, 4x leverage short. let's have it. Tomorrow we
All
have
right.
a defined winner. It's going to be great. All right.
All right. So where are we on the board now? Are we
Yeah,
are we both at 1?
we're both at 2.
We're both at
We're
2.
both at
Okay.
2.
We're both at 2.
Because I won today with a winning profit, and I
Oh, no,
went
no,
up.
no. It's because I thought your board started with 0, not 1. That's why I thought we were both at 1.
No, we're both at, yeah.
Okay.
Maybe I should have done it that way. But anyway, it's done. We're both at 2. We're even Stevens. On a personal note, I just want to say the comments in yesterday's video I thought were fantastic. Please keep those comments going. I'll respond to all of them. I thought it was great. There's great, really great banter in there. It was really fun. I enjoyed commenting. For affiliate links, please use the black box affiliate links in the video below here. 2bit and BitGet exchange. 2bit is a fantastic exchange that we use. I use it every single day for my swing trading. It's fantastic. We got so much coming for 2bit in the future. We're going to be hosting live trading shows, and I can't say much about it yet. It's still in the works, but it's going to be big time, and you're all welcome to join, live stream those shows. Please visit alphanumerics.com. Please visit tonevase.com, and please like and subscribe. Tonevase, it has been a pleasure, and I'll see you the same time tomorrow. Straight A tomorrow. It's a big day for us.
Sounds good. Yeah, tomorrow's show is going to be awesome. All right.
Awesome.
Bye, guys.
Thanks, man.